Hello everyone, welcome back to my channel. Today we are diving into the recent market rally in China that's been making headlines. Is it going to affect India? Should investors be worried or excited? Let's break it all down in today's episode. In the past few weeks, the Chinese stock market has staged an impressive comeback thanks to the government aggressive measures. The CSI 300 index, which tracked the top 300 companies on the Shanghai and Shenzhen exchange, has surged by more than 20%. This gain put it into what analysts can call a technical bull market. In fact, last week the CSI 300 recorded its biggest one-week rally since 2008. Quite the turnaround for a market that was down by over 45% from its peak just 2 years ago. So, what's driving this recovery? China's government has implemented several key measures, including cutting interest rate to help stabilize its economy and boost market confidence. With these interventions, Chinese stocks have once again caught the eye of both domestic and international investors. The question is what this means for us here in India. With China's market looking more attractive to investors, there are some speculation that global companies and financial institutions might reconsider their investment strategies. China recover could be lead to a shift in the portfolio allocation, drawing funds away from markets like India. But before we jump to conclusion, domestic brokerage firm like Kotak Mahindra Institution Equities recently put out a report analyzing the situation. According to them, despite China's strong rally, the impact on India is likely to be minimal. Let's take a closer look at why this is the case. Kodak Institutional Equities doesn't expect China's economy recover to have a significant effect on India. Firstly, trade relations between the two countries are expected to remain stable. India's exports to China are unlikely to see a major increase, while import will continue as usual. Even if China oil demand rises, it expected that new supplies from OPECs or non-OPECs countries, especially Saudi Arabia, will keep the global oil market balanced. Yes, some metal companies in India might benefit from China's recovery, but any meaningful boost in earning will depend on how long and sustained China economy rebound actually is, which is still a question. Now, what about the foreign portfolio investment? According to the report, FPI flow to India may see some moderation. Investors may be attracted to China's more attractive valuations, and active FPIs could start channeling more funds into China if the rally continues. However, it's important to note that the Kodak doesn't believe we will see a large-scale withdrawal of FPI funds from India in favor of China. At most, passive inflow from ETFs that track emerging market might slow down, but this is unlikely significantly disrupt the Indian market. On the domestic front, things look quite different. Kodak point out that India's market is largely being driven by local enthusiasm. Non-institutional investors such as retail investors have been quite bullish, continuing to buy even at higher prices. As long as their optimism is in the air, their investment aren't like to shift their strategies anytime soon. And for the institutional investors such as mutual funds, they have got no choice but to keep deploying incoming fund into the market, regardless of current valuation of the market condition. This consistent flow of domestic fund has kept India's market momentum going strong and not something that rally in China can easily disrupt. So what should Indian investor make of all this? Well, the key takeaway here is that while China's market may be seeing resurgence, its impact on India is expected to be minimal. Our trade with China remains stable. FPI flows into India are unlikely to be significantly diverted, and the strong domestic sentiment is keeping our market strong. In short, while it's always good to stay informed about global developments, this is not not a reason for Indian investor to panic or move any sudden moves. As always, it's best to consult with certified financial expert before making any investment decisions. So that's all for today's episode. If you found this breakdown helpful, don't forget to hit the like button and subscribe to our channel for more updates on financial market and global trends. And let me know in the comments, do you think China's rally could have been any unforeseen impact on India's economy? I would love to hear your thoughts. Thanks for watching and see you in the next video.